Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. This segment is brought to you by Apto, your brokerage in the cloud. Visit apto.com. And I'm laughing because last time I said that, I said your brokerage in the crowd. And we have Hugh Kelly here with Hugh Kelly Real Estate Economics, and we have Anthony Graziano, the commercial real estate expert, also chairman of Integra Realty Resources. And we're going over Viewpoint, their annual report. Check this out. We'll have the link on the website, creshow.com. And let's talk about foreign investment in U.S. real estate, because it seems like it's been a lot of interest in U.S. because of the safety, because of maybe some in cases the yield. What do you expect moving forward, especially with a Trump presidency?
Sure. So foreign investment clearly has been a driver. It was one of the things that brought us out of the recession, one of the big things that brought us out of the recession early. I happen to have the benefit of practicing. My practice is in Miami. So ground zero for international investment, certainly a front row seat to watch the South American petrodollars migrate to Miami and bring us even out of a condo recession in 2009, 10, 11. Those that moved early in Miami and bought under replacement cost made a fortune in a 3 or 4 year period. And you know, that money moved in very well. We're starting to see that international money, and we've been seeing that international money have a big impact on the commercial real estate world over the last few years. I would say that it's going to continue to make a big impact. I don't see any change in the world economics that would lead me to believe that there's a safer place to put your money or a better risk-adjusted return to be had than the United States.
So when you started this report, you said you started September, October, then when November hit, did you adjust your thinking any on foreign investment in the U.S., or is this the same stride?
No, I think it's the same stride because a lot of the things that are driving foreign investment in the U.S. didn't have to do with the presidential election. Now, you know, you can make the point that, you know, a Trump presidency is going to scare the Mexican economy and that's going to have some impact on investment from Mexico. It's not as big of a component of foreign investment, though, as coming from Europe, as coming from China, as coming from Canada. So, you know, I think if there's a direct potential hit that gets taken, it's certainly with the Mexican economy and Trump's position on Mexico and the wall.
And you should always pay attention because you're going to be surprised. Do you know the Mexican peso is up 15% since inauguration day? Right. So the Mexican currency is strengthening, not weakening.
No such thing as bad publicity, right?
And as well, I don't know about that. The thing about foreign investment in U.S. real estate is it comes directly and indirectly, and Anthony is just on target with you know, how directly foreign investment, you know, helped the recovery in real estate and continues to sustain values for exactly those reasons. But here in the Southeast, in particular, you see the indirect influence of foreign investment in all of the investment that happens. You know, here in Atlanta, you have Mercedes moving its headquarters down from New Jersey, right? You've got BMW in the Carolinas. You've got other plants in Mississippi and Alabama. You have Toyota building a huge headquarters north of Dallas. These are influential in shaping the real estate markets that they go into because they're such huge investments.
Yeah. Well, one of the things that I think you brought up earlier, Anthony, was retail and retail REITs moving forward. And so there's a lot of news. Obviously, everybody's hearing it. A lot of stores having problems. A lot of retailers, I guess GameStop, I just heard that they're having problems that, you know, why are you going to buy your games in a store when you can just get them online? So what's going on with retail? What do you expect for the retail sector moving forward?
Sure. I mean, so look, there's the outlook of the retailers themselves, right, which ultimately becomes, as I said before, the residual to what happens to shopping centers. But we've been going through this transition now for some time. We've been in a 5 to 8 year transition of the rise of the internet and you know, clicks versus bricks and this whole dialogue of how online is going to affect the physical retail real estate. It's the current release of how many retailers are truly struggling and now are forced to take action. It's the big retailers like Sears that we're seeing going through this real upheaval without any way out, really. So the question becomes, what happens to where the big retailers are and the national retailers are, what's going to happen to those shopping centers? I take a more bullish view on retail going forward. I always tell people, if you come to me and you say, where are the good opportunities? I don't want to look at what everybody's doing today. Those opportunities are already being taken. I want to look at what's going to happen tomorrow. And I think what's going to happen is we're going to have a tenancy problem in retail. I think there's going to be a short on retail. I think people are going to pound, the values in retail are going to get pounded based on how exposed they are to these retailers. But I would suggest to you that retail real estate is some of the most adaptable real estate in the U.S. It generally tends to be single story, which means there's opportunities for redevelopment there. It has a high parking ratio. It generally has very good visibility and the best location in any community. So to the extent that the market beats up on the value of retail assets because of current cash flow or tenancy, I say ignore all that, don't worry. Retail in the long term is a great play because the physical real estate is good. Great location.
That's a good point. Skate where the puck is going.
Right. Skate where the puck is going. I'm going to steal that.
Yeah.
It's not mine.
Well, yeah, that's Gretzky, right?
Yeah.
That's the other thing about we tend to think so much in silos, right? And so we think office, retail. The world has changed. The world has changed. And so now you've got this. It's not just clicks and bricks. Although you begin to see Amazon is now opening its 6th retail physical store. That's a story because they want to be more dominant in store retailing than Walmart. The trajectory for Amazon is intentionally to be the first $1 trillion public company. That's not going to be all over the internet. And then, how does that link in with the industrial real estate? How does that look with last mile fulfillment centers? And so I think you need to begin to think of something we've classified as industrial real estate as actually being part of the retail chain.
Which it always has been, but I don't think it's been formalized. And I will tell you that the convergence of artificial intelligence and big data are going to make that more so. And here's the biggest play right now in Amazon. Amazon's big play and the long-term big play is inventory management, right? The biggest overhead in retailers besides their real estate is excess inventory and wasted or mispriced inventory. A lot of that ties back to their warehouse distribution systems. But understanding consumer behavior, being able to anticipate what consumers want, when they want it, when the deals and the sales, how much of it they want, is going to be an integral part of the supply chain. And so I think it all ties together over the next 5 years as the technology gets better and as the big companies invest in that understanding of consumerism.
And look at what Walmart is advertising. They're advertising that they're leading a resurgent manufacturing in the country. That's their advertising program. So there you have the link going in the other direction from the stores, back to the industrial sector.
And now they're servicing the third-party logistics market as well as their own internal logistics.
Right, and you even have things like as we talk about augmented reality and artificial intelligence, the rise of the autonomous vehicle. Right, what is every car manufacturer selling on their TV commercials today? How much fun is it to drive? Right? Yeah. So that's what they. So I think you have to. I'm a big believer that you have to look not just in your silo, but to look at the wider socioeconomic environment in which real estate exists. Yeah. I see lots of things there that are positively bullish for real estate, if for no other reason that we're going to be adding another 42 or 45 million people in the United States in the next 20 years. That's a lot of shoppers.
Right. Well, I made the point. I wrote an article for the Miami Herald, I guess about 2 months ago, about the future of retail and where I saw the opportunities in retail. Besides the investing opportunities in retail, let's talk about the management. What are the near-term opportunities for those that hold retail? And I made the point that we will always need retail. We need a place to gather. As human beings, we expect to be able to get together. My wife is a competitive, what I call a predatory retail shopper, right? She goes in to any TJX branded store to find the best deal on the best, that she can find. But there is a social need for us to be together. So retail will always be there. I think it'll always have a place. But the key is you're seeing it transition more with entertainment. A bigger part of the retail experience is how can I hold the consumer for a 3 to 4 hour period? Historically, we used to do that with the movie theaters. We did that then by introducing the anchors. Then we did food. So the question really becomes, what are the entertainment options that we can provide? Because ultimately, retail has to service the consumer that wants to spend a half a day going somewhere and doing something. Shopping's a component of that, but there needs to be an entertainment element as well.
Yeah, very good points. I think retail is not going away. It is changing,
Right.
though, and it's going to be interesting to see what's moving forward and what consumers want. I think one of the things consumers of this show want to know is about the debt market. I think, the way of the debt market will obviously control the aspect of values, acquisitions, dispositions, how you manage your property. So stay with us. We'll take a short break. When we get back, we're going to look at CMBS. We're going to look at the banks. We're going to look at the changes in regulations and how that may impact you and your real estate and your debt moving forward. Stay with us. This is America's Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.